Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Icahn.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Thursday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Icahn and Dennis Dick on the show today. We have to talk about the move in the solar stocks. They're all over the place, up, down, left to right. And we're going to be joined by Gordon Johnson at the end of our show from Vertical Group, who will be able to talk us through the moves in the sector, both in the Chinese solar stocks and First Solar, which he downgraded this morning, and anything else related to those stocks. So we have solar stocks on our mind. We have Allergan in the news, new stake from Icahn in that. Again, we have earnings from Smuckers and Five Below and just a lot of stuff. So we're going to try to hit on as many things as we can. And we do have a busy show today, though, with three guests. I mentioned Gordon Johnson. We have another guest at 8:15, Michael Sokoll. He is the Senior Managing Director of the Nasdaq Market Intelligence Desk. He will join the show at 8:15. And Christian Fromhertz from Tribeca Trade Group will join the show at 8:35. Joel, how are we doing this morning in the S&Ps?
June. I say June S&Ps.
You're on mute, though. You are on mute.
June.
There we go.
June S&Ps are trading in the green by 2 points here at 74.25. Your pre-market high, 2779.75. Target on the upside, 2783.50. That was your March 14th high. On the downside, your lows at 2770.25. Not much under that until you get down to the daily pivot from yesterday at 27.65. You have crude in the green by 64 cents at 65.37. Gold and silver moving in tandem today, both trading up. Gold up 220 at 1303.60, and silver up 11 cents at 16.80. And Bitcoin just hanging out still at the $7,500 area. Trading up $175 at $7,700. Dennis, I just want to alert you that it's rollover. So if you paid for quotes in the S&Ps, the front month contract is now September.
Yeah, but I don't, so I don't care. I stick with the SPY and I don't worry about rollover.
All right.
It's nice to have the SPY. I mean, it doesn't work 8 to 4 in the morning, but for the most part, I'm not trading during that time. So it's kind of nice. You know why I like the SPY too? It's tighter market. You often have a 1 penny market where you got in those E-minis, you got to pay that quarter point.
There's
tight.
Always a tick market, $12.
Yeah, well, the tick on the E-mini though is a quarter point. The tick on the SPY is 1 cent. It's a tighter market. I don't have to pay as much. If I want to get in and out quickly or take liquidity, way better on the SPY. SPY, superior trading vehicle to the E-mini. You heard it here first.
And what came first?
Although it just tracks it.
What came,
Without the E-mini, we'd be in trouble.
Exactly. All right. we got tons of news here today. So
I have my head on a swivel here this morning. There is so much stuff going on. It's like, what's going on? Oh, this news there, left, right. Spencer, where do you want to start? Because we have so much news here this morning.
Yeah, no digressions today.
I feel like we got to start with solar. I mean,
I think so.
There's just a lot of different headlines here. So
what's the tariffs headline? So we know there's tariffs coming or they're not coming. What's going on here with the tariffs? Do we know?
Yeah, and a lot of that's part of the thing is like a lot of the news from this morning is goes back from a couple of days ago. So yeah, Trump has, oh gosh, you know what? I can't even get the story straight because I was reading like 4 different things this morning. And so, yeah, I think we're imposing new tariffs. I read an article in Bloomberg that the new tariffs that we had imposed or discussed imposing had ended like $250 million in solar deals, just like that. So I don't really know what here. You know what? I should get a better explanation for you. But in the meantime, with the solar tariffs looming, and we saw a lot of the sector move earlier in the week. We do have some follow through upgrades today, or ratings changes today, I should say, not upgrades. First Solar is catching a double downgrade I think, from
after two downgrades, after the downgrade yesterday in the morning and the downgrade the day before. They are just ganging up and beating the hell out of this stock.
Yeah, Gordon Johnson had a buy, and now he has a sell. So he just skipped over neutral entirely. Goldman Sachs also downgrading First Solar to sell this morning. You mentioned the two they had yesterday as well. I think it's just the tariff situation has made things incredibly difficult for all these companies.
I mean, I guess to figure it out going forward, we're going to talk to Gordon Johnson so he can break this down fundamentally a lot better than I can. So I'll just leave it up to him. Just tell you from a technical basis, thing just continues to collapse, and it's because it's news. I mean, I don't care what the chart looks like. You keep getting downgraded, you're going to keep going down. So we've had, 1, 2, 3. This is the third day now where we've had downgrades, and two significant ones coming from Gordon Johnson, who I feel is like the best on this sector in the industry. So when he's downgrading, I was thinking about buying this at 50. I said it on the show yesterday. And now I want to hear what Gordon has to say, because he's saying it's going to 42. So I know better than to fight Gordon Johnson on anything, because he seems to be right a lot of times. So I'm sticking away from my First Solar purchase until we talk to Gordon and see what he thinks here going forward. But obviously a lot of uncertainty in this industry all of a sudden. You don't see a stock go from $70 to $53 in 5 trading sessions if there's not uncertainty. But this has caught a lot of people here. It has been straight down. Everybody keeps thinking there's going to be some type of relief pop, and it just comes in the next morning and there's more downgrades. 2 to sell, 1 from the big gun GS, and obviously 1 from somebody who's very well respected in this industry, Gordon Johnson.
Yeah, and it's just kind of interesting. We're bringing up the 15-minute chart here, and someone's sticking in here at $54, Dennis. What do you got for a bid offer there? We're down $1.50.
53.75 to 54. It's not tanking. I mean, it's down so much. Like, got to get to a point here. And full disclosure, I am shorted. I actually shorted a little bit the last night there on this double downgrade. I'm looking at probably covering it in here, but you just got to think that this stock is down so much that eventually it will get a relief pop somewhere, even despite being downgraded.
What about it not even taking out yesterday's low, though? Is that not concerning to you? You think
a little bit? Yeah. I'm saying I'm looking to cover it here this morning. Like, I'm playing it, obviously, that the stock was going to be down here. I got the news breaking last night, first Gordon and then Goldman Sachs. So I was obviously playing from the short side last night, held it into today. But I think it's not down as much as I thought it would be. So that is somewhat concerning.
Yeah, I would just give you the pre-market low here. It's been kind of sleepy. I mean, someone definitely has a bid out here. I don't know if it's John Dotson or Jez or Ed Seeker.
One of our guys.
Kiwi 22. I mean, the way you
guys moved
that Sokoll the other day. 53.60 is your pre-market low. Yesterday's low, 52.61. So the longer it takes to get to that 52.61, I think some people could get jammed on the short side, Dennis, and I hope you're not one of them.
And like I said, I'm looking to sneak out of here. I'm in from the higher 54 handle, so I'm already up a point in this, but I'm looking at this and it's not going down. I thought, with the double downgrade, this could actually kiss a 52 handle. I was even saying to one of my buddies last night. It's not doing that. There's other news here. There's tariffs. I mean, the thing has been down so much so fast. This could be one that could turn around and squeeze a few shorts on it. But that being said, stock is still weak here this morning. So I'm probably covering this thing, if not in the pre-market, at the open.
Okay. All right. And just going the opposite way, CSIQ got an upgrade? Who's
from JP Morgan, but then all this tariff news and stuff. CSIQ is trading up, though. And that thing has been crushed. And Gordon Johnson was all over that, too. I mean, look at this CSIQ. Remember on our show last time Gordon Johnson was on, I was asking about this because there was this take private offer from the CEO, it was going to be up at 1850. And I was like, well, you think about that. And, well, that's a pretty good, when stock's at 17. Well, Gordon Johnson came on the show that day and said, I don't believe it. And when he said, I don't believe it, I hit the sell button on my stock. I sold it all that morning, I think, at in the 17 handle. And I'm really happy I did. This thing is 1244 now. It's been annihilated. These solar stocks are just in free fall. So they are going to have a bounce here eventually. They are going to have a relief rally. There's going to be a day that they don't get downgraded. Today, Canadian Solar is getting a little bit of a bounce because JP Morgan giving some love. Spencer, what is the details on that rating change?
Yep, that was a surprise this morning to see an upgrade on that. One's gotten crushed. JP Morgan upgrading the stock to neutral, but they're lowering their price target to $15.
So this is just playing catch up here.
Yes.
They were too bullish on the thing, and now they're playing catch up.
Exactly.
So it's hard to really give this a lot of weight. I mean, it is getting a pop. It is up 3%. It is JP Morgan, who is very influential. So it's not surprising that it's trading higher here. But again, this thing is down 4 days in a row from basically $17 to 12. It basically has lost 30% a week.
Wow.
That's unbelievable.
You know what? I'm not going to look at yesterday's high as a bogey, 1334, because it's not even over 13. But I'll keep an eye on your 2-day close at 1309 potential resistance on the downside. If this thing goes into reverse and it goes red, don't get too excited. 1228 was yesterday's low, so see if it can find support there. Did find support right in that lower 12 handle. That was back in April, May, and June of last year. So a little more identifiable support in CSIQ. Just talking about the tariffs, ZTE, getting some pops in some stocks here. Dennis, you got to be happy the Qualcomm here. I guess this ZTE thing is going through, and it's good for Qualcomm. Are you going to try and get out even on it, Dennis?
Probably. No, I don't know what I'm going to do on Qualcomm. I liked it for the dividend. I'm going to talk to Sean Udall, who I'm going to talk to about this, because Sean knows this stock way better than anyone. He knows the tech stocks just well. And he was saying at 50, it was one of his picks of, the year going forward. So if Sean Udall is still bullish, I'm still bullish Qualcomm. That's Sean Udall so hot right now.
Yeah, look at Twitter, over $40, Dennis. Did you ever think you would see the day? It got the downgrade, shrugged that off, went from
immediately shrugged it off, Joel.
And they're also doing a little bit of convertible offering, and they scooped that up. So good news, over 40 here, trading up 24 cents. So nice move in Twitter here.
Yeah, so you can see there's obviously a lot of stocks that are just like honey badger stocks. It doesn't matter what they do. They're in favor right now. What's in favor? What we've been saying, what's hot is hot, what's not is not. What stays in favor continues to be in favor. And despite Twitter having some bad fundamental news, I mean, that's dilution. It's full dilution.
Yep.
It just shrugs it off and bounces right back, like literally within an hour. There's just so much underneath demand. We always talk about overhead supply, underneath demand as well. And there's just so much underneath demand in Twitter right now from people who are obviously caught short. And not only that, people who believe in the story here now, and they're really jumping on board. I mean, once you see these things go in rocket ship mode, people get really excited and they like to chase stocks. Not only analysts that chase price, it's a lot of traders that chase price as well. I don't think that's a great strategy long run, but you can't argue with it. It's working here right now, at least in stocks like Twitter.
All right, let's get one earnings report in there. And holy mackerel, people are not eating food, and they're really not eating jam. Holy moly.
Nobody likes jam. Jam is getting jammed this morning.
Look at that. Spencer, they must horrible numbers or horrible guidance or both.
JM Smucker, ticker SJM, Q4 EPS $1.93 versus a $2.20 estimate. Sales 1.78 versus $1.81 billion. So a miss on both of the Q4 figures there for SJM. Fiscal year EPS guidance coming in higher than the estimate by about 20 cents. Sales guidance for the fiscal year also higher by about $1 billion. So I'm not really, I think it might be just a little bit overdone this morning, but it is getting cracked.
I mean, this is just, again, what is in favor is in favor, what is not is not. And the strong get stronger and the weak get weaker. And SJM is the story of a weak stock. It has been out of favor. Food stocks have been out of favor. It had the nice rally October, November when everything rallied. That was the pop to sell, because we are now taking out those October lows down here at $97. I've been seeing this half story before. I mean, I'm not coming here and buying this thing at 98. The thing's completely out of favor. You have anybody who's been buying it is going to be looking to get the hell out. Path of least resistance is probably still down, even though I feel like fundamentally this is way overdone. But technically speaking, this is taken out a $100 level. It's a key critical support level. You get up near 100 again, there's going to be sellers. It's just ugly.
Yeah. Interesting pre-market low, 96 even. Not much volume traded there. If you're waiting to cover short from March of 2014, 95.38 was the low that month. So I'm calling 95, 95 and a half, 96 buy zone. I don't think we're getting there. 8:15, we got our first guest.
Yep, Michael Sokoll, a new guest, Senior Managing Director of the Nasdaq Market Intelligence Desk. We'll be right back with Michael. All right, welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Icahn, and Dennis Dick on now with Michael Sokoll, Senior Managing Director of the Market Intelligence Desk at Nasdaq. Michael, how is your morning going?
Oh, very well, thank you. Good morning, everyone.
So let's start macro here, and then we can see where the conversation takes us. But we've got this North Korea summit happening next week. We have a Fed meeting, we have an OPEC meeting, we have an ECB meeting. So a lot of stuff on the macro storyline or the macro front. What catalyst are you most watching right now?
I think that the Fed is the most important. That's kind of priced in. They'll be looking at the statement. Things like North Korea can move the needle, but tend to get sort of ignored by the market unless something really, really positive or negative happens. Circling back to the Fed, we've seen primarily because of what happened in Italy about a week ago, the expectations for a fourth rate hike this year get dialed back a little bit. So people are really very focused on that. I think that, along with some other things, has helped the market rally over the last couple of days, because if rates aren't going to go up quite as fast as feared, you end up maybe with a little bit of a Goldilocks scenario. So I think the Fed is the main thing on that. Also, of course, the G7, it's kind of Trump against the world here. And to the extent that the tariffs as a conversation remains sort of low level, I think the market can get past that. If it continues and gets worse and you get more retaliation, you're going to get a lot more company-specific effects, and it can hurt market sentiment.
Michael, we want to go more into specifics of the market. I would just like to discuss your role here as at Nasdaq. You're the Senior Managing Director of the Nasdaq Market Intelligence Desk. So how long has that desk been around? And I mean, you guys have to put out information on companies. Just kind of tell us about you and your support staff and how you decide what news to emphasize.
Sure. So we've been around for almost 20 years now. Basically, our role is to speak to companies that are listed on NASDAQ about the trading in their stock. So we're not writing research like a sell-side analyst, but we do follow sectors broadly so that we can help companies understand the macro picture and also the sector, situation in their stocks, and also, things like specific trades, block trades, who's active in the shares and so forth. So we serve as a resource for those companies. We reach them proactively, and also take incoming calls or emails to help them understand. And hopefully they have one place to go if they need information, rather than, trying to run their business at the same time as, searching around for different, factors that are impacting their trading. And we also help them with data and market structure questions, things like that.
Hi, Michael. Dennis Dick here. Just to follow up on that, when you see unusual trading activity occurring in a stock or an issue, and obviously there's no company news out there, do you contact the company then and ask the company what's going on, if there is something going on, and then do you decide to halt the stock? And what is the process when you guys do decide to halt the stock?
Oh, that's a great question. So we are part of what we call listing services, and what we're doing is, if you will, part of the customer service realm of NASDAQ. There's a separate regulatory group within NASDAQ who, in parallel to what we're doing, is also looking at companies for any kind of unusual trading. They're the regulators, so they would be the same people that would see companies' news perhaps before it goes out to the wires, making decisions on buy, halt or no halt in that situation. But yes, so they're the first line of defense against insider trading and manipulative trading. They would, if they see an unusual pattern in a stock, they have some pretty sophisticated technology to detect that. They would be in touch with company officers, and generally the conversation would be, hey, are you aware of any unusual activity and any reasons for it in your stock? What would be causing it? If the answer were to come back, oh yeah, as a matter of fact, we're working on some material announcement, that would probably prompt a trading halt, and then the news would then come out. The idea being, trading halt isn't in and of itself a negative thing. It's just a timeout so that you have a fair chance for everybody in the marketplace to reassess and make a new buy, sell or hold decision in the stock.
Let's take it over to the market structure area for a little bit there, and we've got the access fee pilot coming up here. And obviously, there's two sides to every story here. Some people are saying, it obviously distorts trading activity, where you've got, traders just trading for rebates, and obviously a lot of, different types of trading activity happening around that. Then, you can have the argument too that helps to induce liquidity, because if you've got, rebates on an exchange, that liquidity providers will come in to provide liquidity to get those rebates. What are your thoughts here on the access fee pilot going forward, and what are your thoughts on the maker-taker system?
Yeah, that's great, and I think you framed it exactly right. There are two sides to this issue. A lot of folks have written in comment letters to the SEC in support of it. It's a 2-year pilot over 3,000 stocks, and the question is, if you change the incentives, will that change the way trading occurs? How people, put in their routing decisions on where to send order flow? I guess the genesis of the pilot comes out of the MSAC meeting with the SEC. I should note that the exchanges were not party to that committee. They didn't have representation on it. So I think the exchange's view is different. The New York Stock Exchange and Nasdaq and others have written that there is concern about whether or not, if you do a pilot like this and reduce the incentives to provide liquidity, will you end up with wider spreads? Will you end up with higher trading costs for investors? And I think our view is, you don't necessarily need 3,000 stocks across 2 years to develop the data to do this, if at all. All of this comes out of the current Reg NMS rules, where the exchanges are following the current rule structure. And so maybe the question is, do you have a more holistic approach to market structure, change a bunch of things at once rather than just focusing on the access fee part of it?
And,
I just want to follow up with just 1 second, Joe. I just want to follow up one more time with this. And, I'm torn on this as well, because you can look at this, and obviously it does sometimes distort incentives, or, the argument is that it can distort incentives, as obviously retail brokers maybe don't want to route to the exchange because they have to pay these access fees. And if you're on a TD Ameritrade, we're paying a flat rate of $7, and you're writing a 2,000 share order to a Nasdaq and paying 30 mils, that math doesn't add up where they can, make money. So then they send it to an off-exchange market maker so they don't have to pay that fee. And the difference that also is the off-exchange market maker sometimes actually pays them for that flow. There's also, though, the argument that there's liquidity providers here that need different options, because one thing is, we're not like in the market that we were 15 years ago, where everything is happening on exchange. I mean, you have a lot of action off exchange. So you have liquidity providers that actually will set the price and not get filled on their orders. And that's because off-exchange market makers are obviously being, able to sometimes match the price in quote matching strategies. So the rebate somewhat it does enhance and somewhat does encourage them to provide that liquidity, despite sometimes their orders not being filled. Talk about just off-exchange market making for a little bit. And I think it's all part of the same thing. And people are ignoring that in the access fee pilot. But I think off-exchange market making is a big issue here as well.
Yeah, and that's probably 40% of the market in most, if not all, stocks. And so that's interesting that it is being ignored in the access fee pilot. Off-exchange trading, of course, is your dark pool trading. It's your upstairs trading desks. It's your internalized order flow from the retail brokers, which, if you look at retail or even institutional trading costs, they've really never been as low. So there are some good things in the way the market operates. A long time ago when I worked for a stockbroker, you're charging a couple $100 a share in commission for a trade, and here you are now going on Scottrade or TD Ameritrade, and you're paying $9.95 a trade. So it's pretty good for the retail shareholders. Where you get into perhaps a little bit of trouble is if the off-exchange activity percentage of the market becomes too large, because in a sense you need at least some portion of the market to be showing a lit quote. Otherwise, there's no reference price for anybody else to use. And so, if you get too high on the off-exchange trading, of course, considering, we're a stock exchange, would rather see everything on exchange, but, realizing that there's a valuable place for off-exchange trading, particularly with blocks, you just can't have that percentage get too high, or it degrades perhaps, the price discovery function, which is what the stock exchanges are doing.
On June 25th, it will be 26 years since the S&P began trading the 24-hour on Globex. I know that because my daughter was born on that day. When are we going to 24-hour stock trading here? I mean, that the technology is there. When's that going to come about?
My view is, not anytime soon. I think there was a move towards that even around the dot-com bubble time, where people wanted to come home from work and be able to trade and so forth. I think the short answer is that people want to trade where there's liquidity, And if you string that along over too many hours, if you spread it out too much, you're not really going to find that liquidity. At least in the U.S., you do have the ability to trade technically from 4 a.m., but realistically from 7 a.m. until 8 p.m., where trades can get reported to the tape. So that's quite a bit of time. But it's really only during the regular session from 9:30 to 4 where you have market makers and DMMs on the New York Stock Exchange that are required to make a two-sided market, and that's where folks are more likely to want to do their trades, particularly around the open and the close. And as you probably will know, the open and the close have become much more important. And with the rise in passive investing, the close of trading has seen more of a proportion of the volume. So I think where you can gather liquidity and order flow in defined periods of time, you get perhaps better outcomes. So I don't know necessarily you'll get 24-hour trading, although, for the right stock, you can follow it around the globe. And if you wanted to trade, I don't know, one of the Japanese car makers, you could probably do that around the globe, depending on where you wanted to trade in at what time.
All right, Michael Sokoll has been on with us. He is the Senior Managing Director at the Nasdaq Market Intelligence Desk. I can tell that Dennis would have loved to keep going, but he's doing us all a favor, and he's going to stop asking you questions about market structure. So thanks for your time, Michael, and we'd love to have you back. Have a good rest of the day.
Anytime. Good morning, gentlemen. Thank you.
Thanks, Michael.
All right, June S&P's hanging in here up 275 at 27.75 even. Notice Smucker's getting a little rally here up back in 99, maybe trying to get up to triple digits here. Retail earnings, and we had another retailer that's just blown it out of the water. What was the report from Five, F-I-V-E?
Yeah, Five Below reporting yesterday after the bell. Q1 EPS 39 cents is a 6-cent beat on the estimate. Sales 296 versus $291 million, so a nice beat there. Q2 EPS guidance coming in higher than the estimate. 36 to 38 cents is what they said. 34 cents was the estimate. Sales guidance also coming in higher by 8 to 10 million. I'm sorry. About $10 million, I guess, is how much that was higher by. The fiscal year EPS guidance is coming in higher. The fiscal year sales guidance is coming in line.
Every morning, we have a retailer up 15 to 20%. Every single morning. It's the only retailer of note reporting, so I guess it was going to be the one. I mean, this is just unbelievable, the amount that some of these retailers have rallied. This Five Below has basically doubled in the last year. It's a $5 dollar store. I mean, they're not reinventing the wheel here. It's basically like 5-minute abs, 6-minute abs. It makes me want to come up with a $10 dollar store. Anyways, obviously they're doing something right. I've been in those stores before. They're kind of cool. It's a $5 dollar store. They found a business model that worked. They just kind of took the dollar store model and made it $5. So sound like a simple model, but it's worked for them. That being said, I'm not fading this thing. I'm not coming in here because these things are just ripping right now. But I think when the dust settles, when we look at Five Below 1 year from now, I think the price is lower.
The old Five Below, lower in a year.
Remember that 5-minute abs, 6-minute abs? Don't you want to come out the $6 dollar store and the $7 dollar store, the $3 dollar store? You'd be rich, Joel. That's a rich idea right there.
I don't know if Larry Glickman is in today. He used to be in the pre-market chat. He switched over to YouTube. He's been pounding the table on this one for a while. So, Larry, if you're out there, congratulations. The only thing I could say in this is just real preliminary information. I think someone wants out of some stock at 96. Your initial surge on over 150,000 shares took it to 96 and a quarter. And then you made another run at that area, but you returned back at 95.70, so 95.80. So 96, if you're looking, if it gets up to that area, look in your books, see if you can find a seller. Longer it takes to get back to 96, boom, I think you see a little bit of a decline. But that's the area that's found a seller so far in this morning session.
It's such a tricky market, and the momentum, once it gets going, like we said, this thing was straight up in the report, and it's straight up after the report too. So it's not even like, you look at this chart and you think like what was happening a couple of weeks ago in earnings, and when the stocks were going straight up in the reports, they were selling them off. That's not been the case lately. So you've got to always be aware of changing market dynamics, changing market sentiment. And you've seen some stocks run straight up into the report and then just go higher. especially if they're retailers. The two sectors that are the hottest right now are retail and tech. And it's hard to fade those moves because they just continue to go. So, if you're looking at other sectors, exact opposite. The food stocks probably going to be under a ton of pressure today from SJM. You can look at all the other food stocks that can't seem to catch a bid, and they're all probably going to be down here again today. You can look at GIS trading down already 1.5% in the pre-market. And you can look at KHC trading down here in the pre-market, which is not good for me and Joel because we got this in our investment portfolio. You can look at Kellogg's. You can look at all these other stocks. Kellogg's is down $1.50 here this morning. I mean, they seem to catch a bid, and then there's something else to knock them down. Again, it's all a momentum market.
Okay. All right. We got a couple minutes here to our next guest that I'm looking forward to. But any other earnings from after the close?
Or Cloudera
yeah,
that
I was
reported
just
last
looking.
night. Let's do Cloudera. That is trading down. That did run into the report, and that is disappointing. It is pulling back here this morning, but hard to sell tech stock in the gutter because it seems like they just come right back. I don't know the numbers here. Give me the numbers. We'll analyze whether we should be buying this dip.
Cloudera Q1 EPS 17-cent loss that beat the estimate by a penny. Sales 102.7 to 101.5 million is the estimate, so they beat that number. Q2 EPS guidance a little bit higher by a couple cents. Sales guidance for the quarter higher by about $1 million. Fiscal year EPS guidance a little bit mostly in line. Sales guidance for the fiscal year is also in line.
So in line, not great report. That being said, it seems like whenever these tech stocks pull back, you look at them 5 days later and they've got the losses back. So I don't know if this is going to be the case, but if you're just going with that tell, it says probably to buy the dip in Cloudera. So I don't know if I'm going to jump here, CLDR, and buy the dip here right now. But last time it got annihilated on its. Actually, no. What was the news from back? That wasn't a report, or was that a report? Early April. What was the news that knocked it from 22 to like 14?
On April 4th, that was a.
Was that earnings?
No, that was
the math isn't adding up.
That was guidance. That was guidance after the bell. No, that was earnings. That was earnings on April 3rd. They had
April 3rd, May 3rd, June 3rd. So we're only 2 months later. They had another earnings report already. Why so early?
I don't know.
Maybe that was warnings, but we did have some traders that were bottom fishing there. I can remember by under $14. And actually, Dennis, I think I made like a really crazy statement on that, and you got mad at me or something. I made like a personal guarantee about buying at $14. Remember that? You got upset. You don't remember?
I just remember that I bought it down there, actually. I bought it. You know why? I almost bought the absolute bottom on this, and it was just for a trade. It was a swing trade. And I bought it like 13.20 or something because the CFO came in and bought a whole pile of stock.
That's right.
And I'm like, it needed a vote of confidence. I remember saying it that day. It needed a vote of confidence. This is a vote of confidence. Did. Now, the scalper blood in me, it popped up $1 like the next day, and I was like, I'm out of here. So I came in and took my point out of it, and obviously left 3 more points on the table because it continued to run. But I mean, that's the way this thing works. When a stock is in a gutter, it sometimes needs a vote of confidence, and that's what this needed. And that's what we got with that. I believe it was a CFO purchase. I'm just going from my memory. And he purchased a good chunk of stock. And it's one thing for a CFO to come in and purchase like $1 million worth of stock. You see this all the time. I mean, that's not influential. But when you have a CFO coming in and purchasing like 10 million, 20 million, or 50 million worth of stock, it's like, whoa. Or or if there, and sometimes you'll see like one of these headlines: the CFO purchased 100,000 worth of stock. Well, whoop-de-doop-de. That's just not simply enough. So you got to look at the number too, and how much they're purchasing when you're looking at insider trading and whether it's influential or not.
All right, let's bring in Christian Fromhertz. He's been in the chat under Chris F, and I think he was talking about maybe GameStop or a few other stocks with yesterday or a few days ago. Let's catch up with Christian and see what's on his radar.
All right, we'll be right back.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Icahn, along with Dennis Dick and Spencer Israel working the boards. We are joined by Christian Fromhertz, founder and CEO of Tribeca Trade Group. Christian, how you doing this morning?
Pretty good. Thanks for having me on, guys. Really appreciate it. And, very much enjoy listening to your morning show. I've been a regular listener, and yeah, Chris Seth in the chat. I wasn't trying to disguise my name.
No, that's no. I'm sorry. I didn't know if you wanted me to reveal your secrets, but I just find it interesting.
Just create a new account, Chris. Create a new account and just
sorry about that, Chris.
Well, see, I do go by Christian and Chris, so I was not trying to, trying to be tricky. But you're like the other day, you're like, yeah, we got a new guy in here. I was like, no, it's me. I'm coming on the show.
Just real quickly, before we go into individual stocks and issues, your thoughts on the overall market. Founder Tribeca Trade Group. You work with traders, and I don't know. I just find it a compliment that you come into our chat, our show. What's the reason for that, or what distinguishes us from other people out there in the financial media?
Yeah, sure. I just think that you guys just have, a great sense of just looking at the movers for the morning. It's much better than I think, watching the normal financial media channels. You guys just talk stocks, and you talk about the ratings, you talk about the names that are moving. So, I like it. Since I was on your show a couple months back, I kind of, come in as much as I can to kind of listen. I do a pre-market session, but it doesn't start till 9 o'clock. So, it's just great listening to you guys and listening to the upgrades and downgrades and just the different trends. I heard you guys talking about the retail stocks, which has just been, crazy, right? If somebody said a couple months back that retail was going to do what it's doing, I think it's one of the most unpredictable moves. And I think this market, what my overall market take, I think, I'm very enthused. I'm very excited to see what's going on. Yeah, certainly tech kind of let us out, but it's also been the small caps, and for me, small caps are great to invest in, but they also are an indicator for me. So when the small caps start leading the move, I feel that's a very risk-on tone, and especially coming out of the last couple months of digest. I don't know what you want to call it exactly, but correction, digestion. A lot of false moves down and up, and then to start to see the small caps really get going, and then kind of tech, which now of course is super hot and everybody's talking about, and it was a pretty quick move, but really the small caps were kind of the light at the end of the tunnel, about a month ago to see those start to really pick up. I think there's a lot of things going on there. And the other thing that's really interesting about the small caps, if you go sector by sector, which we could talk a little bit about that, but sure, there's major different performance within sectors. In terms of if you look at small cap healthcare, small cap biotech, that group's up 30% year to date. So if you're looking at the regular benchmarks, I know a lot of people look at IBD and they're like, geez, maybe this healthcare group is going to get going. But you look over at small cap healthcare is up 30% year to date. So, it's just pretty remarkable, some of the things that are going on right now in the market.
Yeah, just kind of keeping your head open, different sectors, what's moving the market. You gave us a nice bone yesterday or a few days ago. Talk about Signet Jewelers going into the report, kind of a sleepy rally. Tell us about the setup that you had in that, how you played it. And are you still in it?
Yes. So what kind of alerted me to that is, just first of all, what you guys have been talking about the last couple of days, and just one after another of these retail companies. And so a couple things with Signet that kind of alerted me to that. First of all, Tiffany's just, skyrocketed, right? And it had, not only did it do that on earnings, but it had that follow through move, right? It's continued to go up. So that, and one of the things that I do on a daily basis is just read the tape. I do this both in the cash market and I do this in the option world. And what's nice about that is you're always putting together a puzzle. So, we started to see a little bit of SIG call buying. Nothing huge, nothing, like, somebody printing 5,000 contracts, but there was a little bites. There was some July calls. Another day, there were some January calls. So you start to look and you're like, oh, when does this thing report? About a week away. And then I began to kind of say, okay, well, Tiffany's is different than, he went to Jared's and Zales. It's a more iconic brand. So if you read through the conference call, which is what I did, you start to think, well, is this, was this something really, different that Tiffany's rolled out? And they did, they've got different themes that they put out, but really it just sounded like the estimates were too low. And I think that's what we're kind of seeing across the board. I mean, people really got negative on retail. The estimates just got a little bit too low. So SIG just figured that, hey, if people are going out and they're buying jewelry, perhaps they're not only just buying jewelry at Tiffany's, right? So how did I play? I'm sorry, that's a very long-winded answer, but how did I play it? The issue with some of these names, right, which people don't talk about too much, is that some of these names are really difficult to play in options. I think SIG was implying a 14% move for earnings, which is a big move. So what I did was I sold put spreads, and I do something that I very rarely do, but I bought a little bit of stock because I just thought it was a decent idea, and sometimes you just got to take a shot in your ideas.
Okay, let's talk about First Solar. Big news today and over the last few days, just really getting killed off the $68 level. Analysts are piling on it today. And you made an observation in the chat. You said, 55.5 is support. And, so to me, I'm looking at it 53.90. Man, you must be, happier than a pig in slop here, buying everything in sight. But then your other comment was, based on a weekly basis. So, ignoring what the street is doing, ignoring the price action right now, is that your bogey? Like if it comes back and closes above 55, I think you've said 55.5 for the week, you'll take a look at it? Or are you looking like you're getting a 2-point discount here and you're going to start buying today?
Yeah, so I don't have any position in First Solar. I just, saw you guys looking at it, and it's definitely, a topic to discuss with all these names just getting shelled. But yeah, I will very much look at the technicals to see if there's a decent support level, something like, so I might give that a shot. I sent out a chart on my Twitter feed. I use value areas, so I very much look at not so much, I do look at volume over time, but I think a really good indicator is volume at price. And it looks like, so basically looking at a weekly chart, which on the weekly chart, there's what's called a yearly value area. Basically price is stopped right there, right around, it can go lower during the week, but it's a weekly bar. So if it manages to hold that 55.50, yeah, I mean, maybe I might look at doing something like selling put spreads. I'm not saying First Solar is going to, rebound and go higher, but maybe you can collect a little bit of premium in a name that you can get rewarded because the implied volatility is very high in the options.
And also with that, if it just sits still and you're selling the put spreads and the vol comes in. Anything else on your radar today before we let you go? Any special stocks that maybe haven't caught up with the rally yet that you're keeping an eye on?
Yeah, absolutely. And, I think, just, talking about the Nasdaq, the Qs and IWM, which have made those moves, I think that the question becomes, are some of these other sectors are going to, if they're not going to participate. So, a couple of names that I like technically, even the diamonds, which I'm not like a big fan of the overall index, of the 30 names and the proxy, but if you look at the DIA, that's actually which is basically how I kind of analyze things. I kind of look at a group of stocks, either sector or an index, and then I go in and drill in and try to find the best performers. But I like DIA. I think Boeing was very very constructive. It's right at that 52-week high. I think FedEx looks interesting. I also like the whole XLI sector. And materials. I mean, you look at what copper's doing too. So, you got a couple names within the materials sector that I think are starting to catch on. I mean, copper going up 6% in about a week is nothing to ignore. I think that's what's that?
I said you can't ignore that in the stocks like FCX, and I think you said TECK. We've been on the line with Christian Fromhertz. He's the founder and CEO of Tribeca Trade Group, joining us here on Benzinga's Pre-Market Prep. Great talking to you, Christian. We'll get you back on again soon.
Thanks, guys. Appreciate it.
All right. Still hanging out here at the 27.75 area. We got a few minutes. We could bring in Mr. Gordon Johnson. We cover our earnings. Do you want to go into some ratings here?
Yeah, we can talk some ratings. I mean, we talked for solar already. We talked Canadian Solar already. There's a lot of other ones here too, though, like AT&T getting downgraded here. Jeffries. We've got Wingstop, WING. Big pop for it, getting upgraded at Wedbush. We've also got DRI catching an upgrade at SunTrust. Full disclosure, I'm long DRI. There's a lot of, ratings really seem to be moving stocks quite a bit when they happen, especially on some of the mid caps. I've noticed like where, you get a rating change. And then, what typically might be a 1 or 2% move is more of a 3 or 4% move right now. And maybe that's just the momentum market that we're in. But I've noticed that the moves from ratings are more exaggerated than they have been over the course of the last year.
Okay. All right. And it is 8:48.
Also, Spotify. Spotify also. Spotify called an upgrade.
Who upgrades Spotify?
Buckingham to buy their price targets at 195.
I mean, this is one that's a classic example. You would normally say, yeah, that's worth about 1 to 2%. It's up 1.91%. This is one that I think is going to challenge the all-time high today. So on this upgrade. So I would not be surprised at all if this thing actually traded up to the 171.23 high that we saw back on May the 2nd. So keep an eye on this one. I'm actually just looking at this and thinking this thing's probably still got more gas in the tank.
And 170 was the all-time closing high on that day. And then I don't know if it was earnings that knocked it down or whatever, but overfilling the gap here. The gap was up from 61.11 to 166. So, Dennis, I'm not going to fade you on that one.
I was just going to say, just before we go to Gordon Johnson there and talk First Solar and obviously the solar sector, we got Allergan here. Icahn, it is rumored, has taken a position in AGN. I still got AGN in my investment portfolio. It's been one of my dogs. Stock is up $4 here on the potential for. I don't know if we have verification on this yet. Icahn has said he's actually purchased this, but
it's just a report from Bloomberg.
That's the report from Bloomberg last night that Icahn has taken a position. So you're going to get some activist action here in Allergan. AGN trading up $4.
The initial surge took it to 160.55, backing off 80 cents off that. You had a high, 159, but we are above that. Keep an eye 160. That's just a nice psychological number. Haven't traded above 160 since May 18th, and the high on that day was 161.34. So if you're looking for a little bit more on the upside, that was your May 18th high.
All right, I'm going to call Gordon Johnson on the fly. I hope he answers. He said he would. So
he's a busy guy, though.
He is a busy guy, but this is Gordon Johnson calling from the Vertical Group. He's a managing director there. Top solar analyst on the street, one of our favorites. Comes on the show every so often, and he makes great calls on the solar sector.
He does. He makes awesome calls.
So let's see if Gordon Johnson will answer his phone right now, because we've got a lot of questions, because I've been trying to follow this story, and it's really hard to keep up with. I've found. So
you reach Gordon, please leave a message.
Oh, Gordon didn't answer. So it looks like we're gonna have to take a quick break, and I'm gonna call Jordan a second time, and we'll be right back with Gordon Johnson. All right, folks, welcome back. Pre-market prep. We are going to call Gordon Johnson at 9 o'clock is when he instructed us to give him a call. So we're going to do that when he gets into his office. Man, we beat Gordon in. I guess, well, we've been in for a while, though. So, all right, Dennis.
He had a busy night.
Yeah, he's a busy
put
guy.
out downgrading First Solar to sell. And I'm obviously very intrigued to be talking to Gordon here just to see what his call is, because I was going to buy First Solar because he liked it back 50. Now he doesn't like it. So that's making me change my mind in a hurry on that First Solar purchase. But I just want to say there's so much other news here today.
Okay.
You've got stocks like AABA, and this is a tracking stock for Alibaba. And you might be looking this morning saying, why is BABA down and AABA trading up? And if you trade that ARB, which I trade this ARB actively, you got to be careful when there's news out there. And I actually looked at this. I was like, oh, there's news on Altaba. They're doing a tender offer to purchase shares, and that is just to the AABA. So that is why AABA is trading up, and yet BABA is trading down. So you got some arbitrage players in there that maybe missed the news here this morning that are probably getting hit, because typically when BABA is up 2%, AABA is usually up about 1.8 to 2% as well. That is not the case here this morning. We've got BABA trading on $1.64, and we got AABA actually trading up $1. So you're looking at 2 or 3% arbitrage out to lunch here this morning. But again, we've got news on it. We saw what happened with DBMT and VMware when there was potential news. Now that was a lot bigger than this, but this tender offer is throwing the ARB out this morning. So caution if you're trading AABA versus BABA, because the tender offer is throwing it out. Do you have the details on that tender offer, Spencer, by any chance?
Yeah,
from the pro?
I just had it up on my screen.
Yeah, bring it up. Just tell us actually.
195 million shares of common stock of AABA.
Okay.
But let's see here. No, that's all I got. So
yeah, so I haven't delved into the details on how this actually affects it. I just know when I'm trading ARB and I see news specific to one issue, and especially on the tracking stock, you've got to be very careful. I've been burned on the ARB that way before. I'll tell you, typically on other things being equal, on a day that AABA is up $1 and BABA is down $1, I'm selling AABA and buying BABA, but not with news.
I got the ratio here. Okay, so 195 million shares at a price equal to 0.35 Alibaba shares. That's the ratio at a price up to or equal 0.35 Alibaba ADRs.
Okay, so let's look and just do the quick math on that. We'll grab our calculator and we'll go take the price of BABA, BABA, which is 206.4 times 0.35, which gives you 72. I don't know, something's weird there. Anyways, I've got to dig more into this because I haven't read the details myself. So right now I'm just telling you and warning the ARB traders out there, because a lot of people play the arbitrage on this, that there is news specific to AABA this morning, and that is why one is going one direction, one is going the other direction. I usually, when this happens, when I'm trade this ARB all the time. I mean, I trade this ARB like sometimes daily. So when stuff like this happens, I back off until the ARB comes back in line again, because I've seen stuff just blow out, and it can blow out even further as they're trying to figure out this ratios and what's going on there. So again, I haven't dived into the fundamental details, so I can't comment on that. All I can comment is that when there is news specific to a tracking stock, you always have to be careful as an arbitrage trader.
All right, for TT Mac here, he wanted to take some levels in Mosaic here. And nice move in this yesterday from 27.87 to 29.08, trading up in the pre-market. This looks ripe here. I can't say anything bad about this issue here. It already had a 2-day run, but the first day wasn't that big. Trading over yesterday's high. I'd still like to see it stay in the 29 handle, stay above 29.08. But you're really on the verge of a nice breakout here. You had a couple daily highs, or actually a couple monthly highs at 29.20. So I'd like to see it clear that hurdle. Then another monthly high at 29.51. But I don't know. It just looks like it's had a long consolidation period, breaking out here over $29. Really nothing bad to say about this stock, MOS.
Hey, did you guys see that story published in on the Wall Street Journal last night at 10 p.m. with maybe the strongest byline I've ever seen for an article ever, written by Jamie Dimon and one Warren E. Buffett. Did you see this? Short-termism is harming the economy. Public companies should reduce or eliminate the practice of estimating quarterly earnings. I haven't read it yet. I just read
what was it? Give it to me again.
Public companies should reduce or eliminate the practice of estimating quarterly earnings. They don't want companies to give quarterly guidance anymore.
Yeah, so that's going to work really well when we're trying to trade these things. So there's no estimates. Is that good or bad? Thanks, Jamie. So he doesn't want us to trade anymore.
Thank Jamie and Warren. Thank Jamie and Warren.
Well, Warren doesn't care. Warren's long-term. Warren, I could totally see that being a Warren thing, because Warren doesn't want you any short-term trading anyways. He just wants long-term investing, hold forever, and that's it. Now, Jamie Dimon owns a bank that does trading, so I would think he wouldn't be of this opinion in writing a paper like that. But maybe he just wants it because nobody can figure out what the estimates are, so price will be all over the place, and maybe that's going to help his own trading unit, because they can figure stuff out a little bit more. I mean, if they're not publishing estimates, their own JP Morgan team could figure out the estimates ahead of time and figure out, hey, that's a really good quarter from where the street is. So I think that's I think that's
just very
awful for traders.
Very
trying to figure out if the
interesting
report's good
idea,
or not.
though. I'm going to read this article.
News desks too, trying to figure out if it's good or not.
Yeah, that's true. That would make it harder for sure. I haven't read the article yet. I'll read it after the show's over, but very interesting nonetheless. Dennis, before we call Gordon Johnson back, can we get some imbalances?
Yeah, we'll jump back over here and take a look. GE, 366,000 to sell. That's just a story that is just not pretty. Obviously, I sold my long-term position a few days ago, ate the loss. I mean, below 1350, this thing's going to see $13 again, in my opinion. It's going to take a vote of confidence to turn GE around. It's going to take, somebody to make a big purchase, some analyst to come in with a huge upgrade. It needs something like that. It's the only way this thing's turning around. And maybe that can happen. And, fundamental news can change. Maybe I'll turn around and get back in for a trade. But as of right now, the trend is not your friend here in GE. We got the banks fairly strong here this morning. TLT is down slightly. It was down more before. Deutsche Bank is trading in the green as well. So you've got two things still helping the banks. They had a nice day yesterday, again, because Deutsche Bank wasn't getting killed and the TLT was weaker. So that is always good news for the banks. Citigroup, 58,000 to buy. JP Morgan, 35,000 to buy. BK, which is smaller bank regional, 59,000 to buy. That stands out. Just looking here at other ones, Square, 65,000 to buy. Alibaba is trading down, and again, we noted there was an analyst rating a price target raise there. I don't know if you have that in front of you, Spencer, the Baba price target raise, but it was a big one. I believe, was it Susquehanna?
On Baba? Oh,
yeah, somebody raised the price target. I saw it by my stream too.
I don't even know if I saw that this morning.
Yeah, they raised up like $300. It was a big price target jump.
I don't even know. Sorry.
I don't have it in front of me, but there was a price target raise in Alibaba here this morning. The reason is trading down again is because this ARB is out to lunch here this morning. You've got ARB players probably getting killed because they were selling short AABA when AABA was trading up 2% and buying Baba against it. Now they realize, oh, there's a tender offer going on that throws it all out. So you've got multiple dynamics happening here. Yes, Susquehanna raising their price target from 220 to 305. Other things being equal, Baba would have been up today. But because the ARB is out, you're getting arbitrage players coming in here and unloading. So that is why Baba is actually trading down on that analyst price target raise, which was huge.
All right, I'm going to give Gordon Johnson a call again on the fly. I hope he'll answer this time. Gordon Johnson, managing director of the Vertical Group. He should be. I hope he's in his office. He is really doing us a favor by coming on very short notice. Joel had emailed him late last night. How do you know he was going to come out with a note this morning, Joel?
You reach Gordon, please leave a message.
You know what? I'll call his office and then he'll be in. But how do you know he's going to have a note this morning, Joel? You emailed him last night. His note came out this morning. He
came out with the note last night.
Oh, he did?
Yeah. That's why we called him. He came out with the note around 5 o'clock last night, and then we reached out to Gordon to get him on to talk about his note.
I had a conspiracy. You just burned it. All right.
No.
All right.
We don't have any conspiracy.
I'm going to take a quick break.
It came out at 5 o'clock last night.
Fine. Then we're going to be right back with Gordon Johnson. We'll be back in a moment. All right, welcome back, everyone. We got Gordon Johnson on the line with us, Managing Director of the Vertical Group. Gordon, you had the double downgrade this morning on First Solar. Buy, forget neutral. We're going straight from buy to sell. Walk us through that downgrade.
Yeah, so effectively what's happened is we've seen a significant shift in policy from the Chinese government. And, you know, as you guys know, China was roughly 54% of global solar installations last year. And with their essentially putting a cap on DG installations of 10 gigawatts, they did 20 gigawatts last year, and temporarily eliminating the incentive for utility scale, we think there's going to be a significant decline in demand in China. And against that backdrop, you have massive amounts of capacity being added. So in a nutshell, we think that, you know, previously we thought that ASPs for Chinese modules would exit this year around 27 cents a watt. We think that number is likely to be closer to 24 cents a watt this year. And by 2020, when First Solar has fully ramped up its Series 6 modules, we think prices could be in the low 20s. And at that level, given First Solar's targeting a cost of 22 cents for a Series 6, we don't think they're going to be competitive in the global markets. And keep in mind, the real benefit to First Solar was the Trump 201 tariffs. If Trump is not in office in 2020, those tariffs essentially end. And when those tariffs end, that temporary benefit to First Solar is going to go away. So we think that China is clearly targeting lower costs for solar modules, cells, wafers, polysilicon. And given that dynamic, we think that you're going to see a swift decline in prices. And that is kryptonite to First Solar. And given the stock has been so strong, we think that two things could happen. Number one, we think their expansion plans could be pushed out and or ended. And number two, we think you could see potential cancellations from some of their contracted partners who have contracted for modules with them all the way through 2020. So with those things in mind, we think it's time to fade that stock.
Gordon, what does this mean for other solar stocks in the sector? Because you see a stock like CSIQ has lost 30% here in the last week and a half. It's went from $17 down to $12.44. I know this is a stock you've covered in the past here. What are your thoughts here on CSIQ?
Yeah, I mean, this is bad for everyone. I mean, keep in mind, I mean, we've seen this before. You guys have certainly seen this before. You know, in 2008, when Spain unexpectedly ended its incentives for solar. You know, in 2013 and 14, when Germany significantly dropped its incentives, and in 14, when Italy dropped its incentives. When solar market behemoths, from a demand perspective, reduced incentives, demand collapses. And we think that's what you're seeing and going to see right now in China. I think we think it has negative implications for all solar stocks. Essentially, ASPs are going to fall. Competition is going to become fierce. And everybody's going to be pressured. Listen, the reason why you're not seeing a more significant decline in module ASPs right now is because a lot of the tier one Chinese solar manufacturers, the CSIQs, the Jinko Solars, the JA Solars of the world, they're contracted to sell modules through the end of this year. But the problem is you have a lot of tier 2 and 3 module manufacturers. Think about this, right? We now estimate demand, global demand, to be around 80 gigawatts with a decline in China. Capacity of modules in China alone is probably around 115 gigawatts. So the point is you just have a massive amount of capacity versus demand. And a lot of that capacity, probably 50% of it, is tier 2 and 3. Those tier 2 and 3 guys do not have contracted volume. So what they're going to do is they're going to lower prices significantly to stay in business. And that's going to really, you know, create some real good, you know, essentially discounted opportunities in China. So the point is this. We think some of these contracts that, you know, the CSIQs, the Jinko Solars, JA Solars of the world have are going to be essentially canceled. The contracts are going to be broken, and they're going to have to lower prices. So we think that's the real risk for those stocks and why those stocks are under pressure.
We're on the line with Gordon Johnson, Managing Director of the Vertical Group. Gordon, I want to take a step back here, you know, from the short-term price action and, you know, from the downgrades and everything. And I thought there was some pretty significant news out in May, and that's when the state of California mandated the installation of solar power generation in all new homes starting in 2020. Now, if you're just looking at this story, you know, solar from a long macro point of view, I mean, in 10, 15, 20 years, I mean, aren't there's going to be much higher use of solar power? So overall, you know, just putting the tariffs aside and the fundamentals and look at the macros, I mean, isn't this a long-term bullish sector?
Well, I don't know if I'd agree with that. I hear what you're saying. But just keep in mind, with respect to California, if you do the math, you assume every single new house built in California uses solar, which it's not, because, you know, there's going to be some exemptions made. It works out to roughly 300 megawatts a year of incremental demand. That's in California. With China now estimated to do 30 gigawatts annually in solar installations this year, and probably dropping next year versus prior estimates as high as, 50 gigawatts, that's 20 gigawatts of demand coming out the market. So, the stocks rallied on a 300 megawatt a year enhancement due to the California news, but the China news is 20 gigawatts of demand coming out the market. The other thing I would note is, in any country where incentives are pooled, solar installations essentially drop down to essentially nothing. And in every country where you've seen aggressive solar installations, aggressive solar support, eventually it's a boom bust type dynamic. And the reason is because as a country, when you install solar, you're basically locking yourself up to a 20-year effectively credit rather, because it's a 20-year system where you're having to pay incentives for 20 years. So any country that does solar, every country that's done solar, and with China being the most recent example, we have multiple examples, Germany, Italy, France, Spain, the Czech Republic, the UK. Countries, get aggressive on solar, installations boom, the bill goes up, and then they essentially drop the incentives and installations drop down. Now, that hasn't been the case in the U.S. because the incentive structure here is a little different. But I think that, to assume that we're going to continue to get this, significant growth in solar installation, I mean, the evidence so far just doesn't bore that idea out. So I understand the long-term view. I understand that's the long-term bullish view. But if you look at the history of solar, the boom bust history of solar, the history suggests that view is maybe not 100% correct.
All right, Gordon, one more and we'll let you on. What would have to happen for you to change your mind on First Solar?
I think what would have to happen is there would have to be an extension of the tariffs on solar, and China would have to come in and reverse its decision. If those two things happened, we would change our mind on First Solar. But we think as of now, we think the risk is to the downside. You're going to have potential contract cancellations. You're going to have severe pressure on modules. And we think those two things are kryptonite for First Solar.
All right. Gordon Johnson has been on the line with us. He is the managing director of the Vertical Group. Gordon, thanks so much for your time. As always, have a good one.
Absolutely.
All right. That's going to be it for us today. We went a little long. Hope you guys, thank you for bearing with us and hope you enjoyed that segment with Gordon. That's going to be it for our show today. Hope you all have had a good morning and have a good rest of your day. And we'll see everyone on Friday.